Hello everyone, welcome back to the Lux Trading Firm channel. With the holidays fast approaching, the trading world is buzzing with a ton of assumptions, advice, and rumors about what really happens in the markets this time of year. Today, we're tackling some of the biggest holiday trading myths and setting the record straight. So, if you've ever wondered whether December trading is totally dead, hyper volatile, or just plain not worth it, stick around. We're about to give you the real scoop, drawing on historical data, professional insights, and the experiences of successful prop traders right here at Lux. Let's not waste any time, and let's get right into it. Starting with myth number 1. The markets just turn off during the holidays. On the surface, it's easy to believe this. As offices start winding down, it can feel like everyone has signed off until January. But let's get specific. While it's true that trading volume often thins out, especially in the final week of December, saying markets shut down entirely is an overstatement. In reality, many markets remain open during most of the holiday season, except for the standard exchange closures on major holidays themselves. Even then, electronic markets for futures, currencies, and certain other instruments may operate on adjusted schedules. So what does that mean for you? Opportunities still exist. Low liquidity can mean wider spreads and more cautious approach, but it doesn't mean the price action disappears. Some traders actually capitalize on these quieter periods. For instance, if you've been watching a certain stock or currency pair all year, you may find subtle but tradable moves as institutional players reshape their portfolios before year's end. The bottom line is, the market might be quieter, but it's not completely silent. Now, myth number 2. Holiday markets are always more volatile. Let's unpack this. The logic behind this myth is that thinner volume often leads to more pronounced price swings. Reduced liquidity can indeed result in sudden unexpected moves, but it's not a guaranteed hallmark of the holiday season. In some years, December volatility has been quite tame. If central banks are not making big announcements and there's no unexpected geopolitical drama or major economic release rocking the boat, then the holiday market can feel relatively placid. On the other hand, if a critical policy decision or surprising earnings released right before Christmas, a thin market can amplify its impact. What really matters is context. Always keep your finger on the pulse of economic calendar, corporate announcements, and global events. Don't assume you'll see wild price action just because it's December. It's a conditional phenomenon, not a seasonal guarantee. Now, myth number 3. You can't profit during the holidays. This one is surprisingly common. Many new traders think December is a write-off, assuming that either the market doesn't move enough or moves too unpredictably. In reality, the end of the year markets can offer unique opportunities. For some, it's about seasonal patterns like the so-called Santa Claus rally, an observed tendency for equities to drift upwards in the last week of December and the first 2 trading days of January. And while this isn't a guaranteed pattern, it's something traders watch closely. Others focus on strategic repositioning. Prop firms and portfolio managers often rebalance their holdings, close out underperforming positions, and prepare fresh strategies for the new year. This can create noticeable shifts in certain sectors. Meanwhile, savvy retail traders might use quieter conditions to refine their strategies, practice patience, and pinpoint low-risk entries. Don't forget about year-end tax considerations. Some investors selling losing positions to offset gains. That can cause price fluctuations you can capitalize on, if you're quick and informed. Profitability isn't out of reach, you just need to know where to look. Our myth number 4 is that all pro traders take December off. Many envision professional traders jetting off to tropical beaches the moment December hits, leaving the markets deserted. While some certainly schedule vacations during the quieter period, you'd be surprised how many remain at their desks even if for fewer hours than usual. Proprietary firms often use December to review a year's performance, analyze what worked and what didn't, and develop their battle plan for Q1. Some traders might scale down their trading frequency, focusing only on the highest confidence setups. Others might trade lighter but still keep a close eye on the market developments. After all, surprises can happen at any time, and skilled traders know that preparedness is key. So don't assume a professional trader's screen time is 0 in December. They might be more selective, but they're rarely completely absent. And the myth number 5 is a bit of an on the contrary side, and that is if you're not trading, you're missing out. This one can create a lot of unnecessary stress. While opportunities do exist, it's perfectly acceptable and sometimes even wise to reduce your activity. If the market's conditions don't fit your particular trading style, maybe your strategy thrives on high liquidity and certain volatility patterns, then it's better to wait for better conditions than force trades. Holiday season can be a great time for reflection. Review your trading journal, analyze your past performance, and set clear goals for the upcoming year. Maybe you'll refine your risk management rules or identify a new asset class to focus on in 2025. The key is to use this time productively, whether or not you're actively placing trades. Remember, the only person setting your schedule is you. Good traders know when to press the pedal and when to ease off. Sometimes, taking a break is actually the best move you can make. So there you have it, 5 major holiday trading myths thoroughly busted. December may bring lighter volumes and different rhythms to the market, but it's far from a write-off. Whether you decide to trade, wait, study, or plan, understanding what really happens during the holidays is key to making informed decisions. If you found this helpful, please give this video a like and hit that subscribe button for more actionable insights from Lux Trading Firm. Let's wrap up 2024 with greater clarity, realistic expectations, and a solid plan for the new year. Thank you for watching, happy holidays, and as always, trade smart, and I'll see you in the next one.